Alright, today we're going to be looking at C Limited, ticker symbol SE. Quick company description: it's a consumer internet company operating via three business segments, being e-commerce, digital financial services and digital entertainment. They then primarily operate in the Southeast Asia region. So as you can probably tell by their name, C is an acronym for Southeast Asia. So they primarily operate in Indonesia, Taiwan, Thailand, Singapore, Malaysia and then the Philippines. Before we get into the business overview and then the rest of the analysis, as always, if you want the document for yourself, you can go grab it down below in the description. And as always, we're not going to go through everything in this document. Otherwise, the video will get too long and basically be going on and on forever. So we're going to try to cover the most important aspects. I'll give you guys a good understanding of the business and then some, key aspects that I'd want to get across for a potential trade analysis for you guys. So breaking down, as always, then the capital structure of the business. So as of the 5th of July, the stock was trading around $150 a share. They had 592 million shares in issue, resulting in a market cap then of around 88 billion. They have 8 billion in cash, 4 billion in debt. So then they have an enterprise value of around $84 billion. So quite a sizable, large company, not massive like obviously Amazon's and Microsoft's, but pretty sizable, decent company, especially for the region. Breaking down their business overview then, so like I mentioned, they have three main business segments. So they have the Grainer, or I think that's how you pronounce it, Grainer, and that's basically their digital entertainment segment. Makes a lot of sense given the fact, again, they operate in Southeast Asia, where other than I think basically Singapore, and maybe Taiwan, the GDP per capita is much lower. So it makes sense to have a much more optimized version of Fortnite for lower end smartphones. The next segment then being Shopee. This is by far their largest segment and it's the e-commerce part. So again, it's the largest e-commerce platform in Southeast Asia and also actually a major player in Brazil. So a bit random, obviously a bit outside of their normal market, but they do operate in Brazil as well. And this is again a mobile first gamified shopping experience. So I think a good comparison to give, especially in the West, is the emergence of Temu. So essentially think Temu, but again for Southeast Asia. And then finally, you have the C Money, which is then the digital financial services. So they do e-wallets via Shopee Pay, a buy now, pay later scheme, which S Pay Later, and then some other consumer and SME lending, credit facilities that they give. One thing to mention also is that the Shopee and the C Money, segments are very closely interlinked, where they have really good economies of scale. And then when you're basically on the Shopee platform and you want to buy something which has a quite high sales price, so say a large item like a computer for instance, then you can utilize stuff like the e-wallets and the buy now pay later that C Money provide on the platform. So it's like this integrated service where they both kind of help each other in terms of popularity. Looking at their segment revenue and growth then, so in 2024 they made $16.8 billion, which was up just under 30% year over year. This growth was primarily driven by Shopee and C Money, both as you can see here. Shopee was up 37% year over year, and then C Money was up 34% year over year. Shopee, however, is by far their biggest revenue driver. So as you can see, it contributed towards $12 billion of revenue, whereas C Money and then Grainer had $2.4 billion and $1.9 billion respectively. And then obviously, as I kind of mentioned here, you can see that the growth via Shopee and C Money was slightly offset by the decline in Grainer. This is just primarily due to market stabilization. So obviously the Free Fire game, and I guess you guys probably know yourselves, the Battle Royale gaming segment and gaming in general, actually, to be fair, which I've covered in a couple other videos of mine, is kind of stagnating at the moment and slightly declining, and we're seeing much far less engagement in most gaming platforms, and so Grainer is also suspect to that slight decline as well. The main cost drivers then, so pretty standard to be honest. You got stuff like cost of revenue for the Shopee business, which is primarily obviously going to be shipping costs. However, we are seeing their Shopee's costs come down on a per order basis, which is then increasing their gross margins. This is thankfully due to economies of scale. So as they obviously grow and grow, You'll see economies of scale come into the operations, and also due to AI optimizations, which we're seeing with a lot of big companies at the moment. Sales and marketing is obviously still a large expense for the company. They are trying to reduce on a relative basis how much they're spending on sales and marketing relative to their revenue to try again increase profitability, but it still remains a very significant part of their expense structure, and this is due to trying to defend, I guess, their market share, especially given how competitive this sector is, and especially with large players like Amazon and Alibaba, as we'll get onto in the next section, trying to expand markets for themselves. It's going to get very, very competitive, and that's why we'll likely see high sales and marketing expenses going forward into the future. In terms of G&A, so general and admin expenses and R&D expenses, this is linked back again to the AI optimization, where we're seeing it kind of become much more streamlined, less hiring, which that's up to you how you want to perceive that, but yeah, it's cutting costs and utilizing technology to drive efficiencies and increase profit margins. Looking at the sector and competitors then, so this is a big segment that you always want to focus on when analyzing a company and a stock. So breaking it down by their three business segments of e-commerce, digital entertainment, and digital financial services. In the e-commerce is by far where this most significant competition is, in my opinion, and which again makes sense because this is also their largest revenue driver. So the main rivals are Lazada via Alibaba, Temu, as we've mentioned, Tokopedia, which is Go2, TikTok Shop, and then Mercado Libre in Brazil. There's also, like I said, Coupang in South Korea, but it's not a direct competitor because they both kind of stay out of each other's regions. So I've kind of given some advantages here that would be useful for you guys to know. So for example, for Shopee, obviously the deep localization and mobile first design is very, very effective, specifically for this region. Because one thing to factor in, especially about Asia, is that a lot of consumers very much prefer utilizing mobile only, and very few consumers utilize PCs and laptops. Laptops are obviously a bit more popular than PCs, but it's not like in the West where everyone has a laptop. A lot of people in Southeast Asia kind of utilize mobiles as their only computing device. So then we also mentioned previously, so you got the integrated logistics and fintech ecosystem, a large user base, which obviously allows for strong network effects. They obviously got good brand strength and moat around that, and marketing, as we've also mentioned. So I would say Shopee has a good competitive edge, but I wouldn't say it's absolute. It's not, I wouldn't say it's very similar to like Amazon in the West, specifically for desktop and laptop. If you're on your desktop or a laptop and you're buying something in the West, especially in the UK, the US, you're very, very much likely going to go to Amazon.com. They have a very, very strong moat. It's not that significant, but it is still very strong, where most people do shop on C and most people like using the platform. However, as I've kind of mentioned here, TikTok is posing a massive threat, specifically in the mobile segment. So we're also seeing that in the West with TikTok Shop in the West. In Asia, as you'd expect, they're absolutely killing it as well, and it's really going to start, in my opinion, eating into C's market share. So I won't go too much into the digital entertainment and the digital financial services. It's pretty standard, to be honest. So obviously, as you'd expect, the main rival is PUBG Mobile via Tencent. NetEase and Activision Blizzard are other main rivals within the gaming mobile space, as you'd expect. Free Fire obviously do have that optimization of low-end devices, so they are, I would say, the market leader in that regard. In terms of downloads, if you get the document for yourself, you'll be able to see some quite interesting information in terms of downloads and where they're ranking in terms of that and the money it's generating. And then, with digital services, you got Grab, GoPay, traditional banks, and then obviously in Brazil, Mercado is again a massive conglomerate in Brazil, and so they also have their own digital financial service. Looking at the future growth outlook then for the company, and specifically what I like looking at is the total addressable market in each sector that a company operates in, to kind of get a good idea of the future growth possibility even that a company can possibly even achieve. So for then the e-commerce segment, and just for Southeast Asia alone, the gross merchandise value, which is basically the total sales that the segment can have, is expected to exceed $200 billion by the end of this year, and Shopee is trying to maintain a 50% share of that, so implying I guess around $100 billion of GMV potential value, which I think they actually did just surpass in 2024. So that is again, a massive business sector and something that I foresee continuing to grow. Given macro conditions of the region in general, so I think Southeast Asia, in my opinion, is one of the more exciting regions of the world at the moment in terms of macroeconomics and future growth and GDP increasing. So the digital entertainment, as we all know, the global gaming market is around 200 billion. Half of that is attributable to mobile, so around 100 billion. And it's something that we, again, would expect to see continually increasing over the next few years. It's a very, very lucrative sector, and again, something that we'd expect to continually see steadily grow, but I wouldn't expect like hyper growth in any of these sectors even. And then with the digital financial services, they have a loan book of around 3 billion, expanding it to around 10 billion. So again, it's a nice chunky business that they can get into. And again, this is something that's obviously going to expand and grow. So that is one good thing about the business, is they have two really strong tailwinds going for it, in that they operate in 3 market segments that are all growing, and then they also operate in a region that, in my opinion, will likely see some of the strongest GDP growth in the next couple decades also. So then we also have some competitive positioning and moat comments here, as we've already kind of mentioned, so I won't go into that. And then again, I kind of concluded on the points we've already talked about and made here. The abridged financial statement, as always, I like to give. You can kind of see the growth. I won't go into it too much. And then we also have some sector analysis where we look at 5 key metrics, from forward EV to sales and forward PE, which is basically looking at the future top line, which is sales, and then the bottom line, earnings, which then, for me personally, covers the most important aspects of the business. And then that is tied into, then again, the top line growth, bottom line growth. And then I'll also like throw in net profit margin in there, just so then I can see the profitability of a company, and specifically maybe it kind of explains why some metrics are green and some metrics are red. Kind of adds more clarification. I would classify C Limited as a positive sector outlier, but also a premium sector outlier, in that then their valuation multiples are both above the sector averages. However, their growth percentages are also above the sector averages. So it's basically a premium positive sector outlier, but these are the kind of companies that you want to go long in and buy. I also then put my video game sector comp in here. This is not as relevant. Again, like I mentioned before, Grain is only around 2 billion of the total, just under 17 billion of total revenues, so it's not that significant, but I just put it in here because I think my last previous video I did a video game sector analysis, and C fell into that, so that's why I just kind of plopped it in here as well, just add some further context. As always, I like to do a SWOT analysis, looking at the strengths, weaknesses, opportunities and threats for a company. I won't go too much into that because we've kind of been talking about that, but again, you can either pause the video here, or you can go grab the document for yourself. Bull and bear case for why you should either be bullish or bearish on the stock. And then also I do some like additional takeaways and stuff here. This, in my opinion, is probably one of the best tabs in terms of the catalyst. So as a trader, we're always trading future information and not past information. So this is ideally what you want to be focusing most of your attention on in terms of whether or not you should specifically trade a stock. In terms of investments, it becomes less, I guess, relevant. But as a trade, this is pretty much, in my opinion, always highly underappreciated and one of the key significant factors if you want to trade a company or not. Technical analysis then, again, I spend about 10% of my time looking at technical analysis and moving averages and all those kind of things. It's not something I spend too long on, just because, again, I'm more of a fundamentally driven trader. But in terms of like moving averages, it's again in a buy range, technical indicators in a sell range, so you can kind of make of that what you will. The stock has, in fairness, breached out in terms of its previous resistance levels, as we saw here around 150, and now it's actually using 150 as a support, so that's quite interesting. I feel like if it does break out, I guess 170, 175, it could very, very, very easily run to 200, which then we cover in the fair value price target section, where, as always, I like to value a company based on two top line, bottom line, so earnings and sales, and then also via the market perception of a company, and then a reasonable, I guess, valuation multiple for the company. So when we factor all those in, again, I kind of explained why I have certain multiples for the reasonable valuation section, and obviously the market section, just the prior year valuation multiples. We kind of concoct all that into one, add the AI models. So investing.com is a popular, I guess, analysis tool that I like to use. They do a plethora of valuation multiples, all done by AI, so it's really nice and kind of efficient to kind of get a nice breadth of different valuations using DCF models, using valuation multiples as well. You add all that up and you get an average of around $180 a share, which as of today represents a more than 20% upside. So I would definitely assign C a buy rating, both from an investing and a trading perspective. I feel like they could have a really, really good 2025, as long as we don't see too many harsh macro issues, specifically related to tariffs that might affect places like Vietnam and some other Southeast Asian countries. As long as we don't see too much of that, I feel like, again, it's a strong region. This is a great quality company that has a strong moat and strong branding in a growing region, in growing markets. And from a long-term investing perspective, it's a definite, I guess, strong buy for me. And from a trading perspective, I feel like there's some even short-term upside that I personally would potentially trade this as well, at least, to around $180, $200 a share. So then that is everything I wanted to get across in this video. As always, if you have any questions, leave them down below in the comments. And then, I'll leave it there until next time.